Let's talk about Volkswagen next, right? So this one, of course, is also German, headquartered in Wolfsburg, whereas, of course, Daimler is headquartered in Stuttgart. Established in 1937, just before the Second World War. It's the world's second largest, might even be the largest, because they are constantly going head-to-head with Toyota, manufacturing somewhere in the region of 10 million units a year. Think about that number. Things like the Polo, and then you mentioned they also own Audi, they own Porsche, they own
Bentley,
all sorts of other
Bugatti,
Bentley
Lamborghini.
and Bugatti. Exactly. I don't know how many of those things they sell, but it's somewhere in the 10 million.
Not many.
73.3 billion euros, so almost exactly the same market capitalization as Daimler. Trades on a slightly higher price-earnings ratio of 12 and a dividend yield of 1.4%. But what's important is those are actually positive numbers now. I mean, before, when they had the crisis with the auto emissions debacle,
yes,
they had losses. Now it has actually returned to positive numbers. Let's put up the chart, which will show that disaster. That's the big slide there in the middle. It's kind of drifted across, now going slightly higher.
All right, so the debacle isn't behind them yet. They've sorted out the US governmental issues there. They still have to overcome the European Commission and all this stuff that's happening there.
So that's like paying a fine in order to settle any obligations.
Yeah, so they've settled everything in the US. They haven't settled everything in the Euro area yet, which is a risk inherent with the current business. And that's why the share price hasn't completely recovered. I mean, we're going from about 240 down to 100. Now we're back up to 140. Surely there's some absolute blue sky there. And I think if you can look past the diesel scandal and understand that they probably will settle with the European authorities.
But sorry, I mean, when you say settle, in the US, they settled with the US Department of Justice, but they also created incentives for people who'd actually bought those TDI.
They would actually buy back your car.
Buy back your car.
Or if you didn't want to,
give you a credit.
Or they'll give you cash and fix your car for free.
Yeah.
$5,000 cash per car and fix it for free. Come on, what a bargain. You know.
Mostly people couldn't care what comes out the back end.
It's a terrible thing that happened, but ironically or positively for VW, they can afford it. They've got a huge amounts of cash on hand. You know, Audi is a complete cash cow for the business. They sell 10 million cars a year, 2 million are Audi. Audi makes them vast majority of profit for the business. And
interestingly, it doesn't seem to have really dented sales much. It's
no,
exactly.
As though
people thought, well, look, you know, maybe they're
going to stop buying, you know,
people thought
Golf
that
GTIs
they would like
and so
stop.
on. No,
not at all.
Not at all. So actually, sales came out recently for the first quarter of this year, incredibly positive. I like the mix that they've got. You know, you can buy everything from a Polo up to a Bugatti Veyron, you know, and that's important because you're covering the entire mix of income.
Those Polos are incredible. I mean,
they are. The number one stolen vehicle in South Africa.
They're two Polos.
Exactly. Be careful, eh? Those cars are easily stolen in this country, unfortunately.
I don't know. There's so many of them, you can just get another one.
That's also true. But the other factor is that they're geographically spread. You can buy these cars in any country. You know, whereas some of your motor manufacturers are specific to certain areas.
What about China? Because China is a very important market. If you look at the total 50 or thereabouts million cars a year, about sort of 18 or something go to the US, 20 or something go to China. Volkswagen has joint ventures in China.
Yes, a lot of them do. They don't go direct there. They join with partners there. And the numbers that have come out from all of these manufacturers, they've all released first quarter numbers, are actually showing incredible returns coming out of China. So we're definitely seeing, even though the economy is slowing down, the demand for vehicles is actually increased.
And the Chinese actually built some roads in the last 3 or 4 decades.
And those roads need to be filled, and there's a fast-growing middle class there.
People love it, and in China they go on these sort of road trips and so on. There's a whole
it's a novelty,
motor clubs,
you know. I
mean,
you had a situation where the vast majority of your population was relatively poor. There wasn't even a fantasy about owning a vehicle, and boom, you know, you fast forward 20, 30 years and you've got this massive middle class, and now they have the opportunity to buy a car.
Yeah, tremendous.
Exactly.
Okay, good. So, hot on this one?
I actually like Volkswagen. The only caveat I have is there is the unknown on the diesel scandal in Europe. It's going to be sorted out eventually. They have the cash to cover it. I think the share price is relatively low. I think there's some great upside potential on them. I like their products. I like the diversification. I'm hot on Volkswagen.
So previously when we discussed this, I went not hot, but I agree with you. I think the share price is telling you that it kind of wants to go higher and it's waiting for the ultimate settlement. But as you say, the most important thing is that the brand has not noticed a decline in sales.
Not at all. Sales are up.
Okay,
looking
I'm gonna
good.
go hot on that one as well. Right.